Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
I tried watching the news for optimism. Turns out they don't carry that channel. I'd give you an update, but the project hasn't started disappointing us yet. We value efficiency so much that we hold 3 meetings just to discuss how to improve it. Don't believe everything you read online, unless it agrees with you. I finally achieved work-life balance. I'm equally confused at home and at work.
In 2025, the mighty US dollar seems to have misplaced its cape. After years of economic outperformance, what analysts lovingly call USD exceptionalism, growth in the US is now looking more ordinary. Europe's steady, UK is cooling, Japan is doing Japan things, and suddenly the dollar is not the tallest kid in class anymore. Add falling US real yields, and global investors are quietly asking, is the dollar still the main character or just part of the supporting cast? But before you shot the dollar into oblivion, remember, while the dollar is weakening, the rest of the world isn't exactly running victory laps either. That means less of a crash, more of a slow, polite decline. In FX terms, think gentle slope, not a cliff. 2025 might just be the year Indian startups finally stop checking their bank accounts with one eye open. Funding is projected to hit $15 billion, up 25% from 2024, and deal making could jump nearly 30%. Not bad for an ecosystem that spent 2023 looking like it needed a long nap. 2024 already showed signs of swagger. $12 billion raised, 993 deals, 6 new unicorns, and a dozen IPOs, letting VCs cash out like they just found a secret exit door. And the real accelerant? Generative AI, where investments have exploded 4.4x since 2020. Everybody wants to be an AI-first company, even if some are still figuring out the first part. India's insurance sector just proved that even the world's sleepiest industry can deliver blockbuster numbers. Globally, insurers collected Euro 7 trillion in 2024, making insurance the world's most profitable way to worry professionally. India, meanwhile, is quietly turning into the growth engine. Total premiums could jump from 11.2 lakh crores to 25 lakh crores by 2030 as penetration rises to 5% of GDP. That's basically the economy saying we should really start protecting our stuff. In non-life, FY25 saw premiums hit 3.08 lakh crores, with motor insurance at 99,000 crores, proof that as long as Indians keep buying cars and occasionally bumping them, insurance will stay very happy. India's media and entertainment industry just got its next big plot twist. And for once, it's not courtesy of a daily soap. PwC says the sector will soar from $32 billion today to $47 billion by 2029, growing at nearly 7.8%, nearly double the global pace. Yes, India isn't just watching content, it's binge growing. Digital is stealing the spotlight. Share of total revenues jumped from 33% to 42% as mobile-first audiences, gamers, and esports fans keep their thumbs busier than ever. But here's the twist. Traditional media like TV and print aren't dying. They're just aging gracefully, like veteran actors who refuse to leave the set. OTT too is expanding from $2.3 billion to $3.5 billion. Here's something that nobody saw coming. Emerging markets, long accused of having inflationary personalities, are now running cooler inflation than the developed world. Yes, the students have officially outperformed the teachers. Bloomberg's charts show emerging market inflation sliding, while developed market prices are heating back up. Turns out EM central banks, often mocked for being overly cautious, tightened early, stayed disciplined, and are now enjoying the victory lap. And the payoff? EM currencies have surged to an 18-month high, as shown by the JP Morgan EMFX index. Here's something that will make every Mumbaiker rethink their rent. 6 families and trusts control thousands of acres across the city. And leading the pack, the Godrej family with a jaw-dropping 3,401 acres. That's not land ownership, that's practically a parallel Bombay. Next comes the F.E. Dinshaw Trust and the Pratap Singh Surji Vallabhdas family with over 600 acres each, followed by the Gigi Boy and Wadia Trusts, names that sound like they were designed specifically to own large parts of Bombay. Most of this land dates back to colonial era grants, which means today's developers are negotiating with history itself. Here's a leaderboard where everyone wins, especially if you're an investor. India's top business families have basically turned the stock market into a wealth creation machine, and the Tata Group is running it like a very well-oiled machine. Noel Tata tops the charts, creating nearly 14 lakh crores in wealth for others, followed by Mukesh Ambani, who in true Ambani fashion treats second place like Wi-Fi, always connected, rarely threatened. Sunil Mittal, the Bajaj family, Mahindras, Adanis, they're all here, proving that in India, conglomerates aren't just business groups, they are economic ecosystems. And yes, subtracting group market cap from wealth created gets you a neat little estimate of personal net worth, like financial Sudoku for the curious. The big takeaway, these leaders aren't just getting rich, they're taking everyone else along for the ride. Here's a ranking that Jeff Bezos would definitely have approved of. Not the richest people on earth, but the ones who have created the most wealth for everyone else. And surprise, Jensen Huang tops the global leaderboard, turning Nvidia into a $4.3 trillion rocket ship. His personal stake, a cool $164 billion. Not bad for someone who still wears leather jackets to investor meetings. Apple, Alphabet, Microsoft, basically the usual suspects of global capitalism. Bezos, Musk, Zuckerberg, they are all here too. Not because they are rich, but because they have made shareholders rich enough to consider early retirement. It's a fascinating reminder. In modern markets, the true superpower isn't getting wealthy, it's making other people wealthy. Though judging by these numbers, the executives seem to have done quite well for themselves.